Greetings, everyone, and welcome back to our Forex mentorship program for beginners. Today, we are going to be looking at market structure. Remember, in our previous videos, we talked about market structure, we talked about technical analysis, we talked about support and resistances. I want us to look at some few things again today. Remember, we said in a market structure, if the market is going down, we are going to see the market form lower highs and lower lows. And we equally said if the market is going up, we want to see the market form higher lows and higher highs. We also said if the market is neither forming either one of these, then it is in a consolidation, it is ranging, or it is at equilibrium. Today we are going to go into the market and we will see all of this in practice. We said when the market is neither forming highs nor forming lows, it is ranging. This is an example of a ranging market, a situation where the market is not trending. There is indecision in the market. Liquidity providers, they are accumulating their orders. As developing students, you do not have to trade when the market is consolidating or when the market is ranging, because you don't know which direction it is going to go. We are also going to talk about support and resistances in details. This is an example of a ranging market or a consolidating market. It is moving sideways. There is no decision. And then finally, we see the market break out. So this is another example of a market that is ranging. It is consolidating. There is indecision. It is almost forming equal highs and equal lows. Now, we talked about a market structure. We said if a market structure is moving up, we want to see the market form higher lows and higher highs. This is an example of what we talked about in our previous video. This is a low that was formed, okay? A support that was formed. We will talk about support and resistances. Now, this support is a level where buyers are buying and they are mounting pressure on this currency, which is NZD JPY. They are mounting pressure here, pushing price up. When price eventually pushes up and forms a high, before this high is formed, remember there was a high here. This is a high. When this high becomes higher than this other high, then we say a higher high has been formed, because this is a high, this is another high, but this high is higher than this high. This is a low, this is another low, but this low is higher than this low, so it becomes a higher low. Okay, now if this previous high gets violated and taken out by another high, then we know that the market is going up or it's in a bullish condition. Remember, we talked about bullish conditions and bearish conditions also. Bullish means the market is moving up or the market is in an uptrend. Now, when the market finally takes out this other high, it forms another high that is higher than the previous high. So this high becomes a higher high because it is higher than this high, and it is also higher than this high. Now, when price eventually pulls back and forms another low, if this previous low is not taken out, this low that is formed becomes a higher low because it is higher than the previous low. This is a low, this is a low, but this low is higher than this low, and this low is higher than this low. So this is a higher low to this low, and this low also is a higher low to this low. I hope you get it. So when the market continues to form higher highs, this is a high that is higher than this one. This high is higher than this high, so it is a higher high. This low is higher than this low. This other low is higher than this low. So this low is a higher low. This low is a higher low because it is higher than the previous low. So when you step into the market and you see the market form lows that are higher than the previous lows and highs that are higher than the previous highs, we say the market is in an uptrend. The market is moving upward. This is why we call it an uptrend. The market is trending upward. The bulls are in control of the market. They are pushing the market up. A scenario like this. Higher lows. This low is higher than this low. This low is higher than this low. This high is higher than this high. This high is higher than this high. So we are in an uptrend. Okay. Now, there is something you can do. You can connect all of these lows. If you connect all of these lows, it is going to form an uptrend line or a support. Let's see if we can connect at least 3 of these lows. Look at this. If you can connect 3 higher lows, we are going to form an uptrend line or a support, a diagonal support. We call it diagonal support in smart money concepts. And this is also a support because price is bouncing off this level. The buyers are pushing price. They are mounting pressure on this price, and price is pushing up. So the buyers are forming support here, and the sellers are unable to break past this support. I hope that is understood. In the other side, when the market is forming lower lows and lower highs, we say the market is in a downtrend. This is a high, this is another high, but this high is lower than this high. This high is lower than this high, so this high becomes a lower high because it is lower than the previous high. This is a lower low. This is a low, okay? This is another low, but this low is lower than this low, and this other low is lower than this low. So the market is in a downtrend when it forms lower highs and lower lows. The market is trending downward. That is market structure. So if you step into the market, there are 3 things. The market is either consolidating or moving sidewards, or the market is moving upward in an uptrend, forming higher lows and higher highs, or the market is moving downward in a downtrend, forming lower highs and lower lows. That is exactly what the market does. The market does only 3 things: moving upward, moving downward, or moving sideways. That is all. If you can understand this, you'll be able to step into the market and trade without any problem. With other confluences, you are going to put other confluences. See, this is a high. This high is lower than this high. This other high is lower than this high. This high is lower than this high. This high is lower than this high. So the market is forming lower highs. This low is higher than this low, but this low is lower than this low, and this other low is lower than the previous low, and it is also lower than this previous low. So it is a lower low. So you can also connect them. You can use a line and you connect them. You connect them. Look at something. You see, this high, this high, this another high, it is lower than this high, so it becomes a lower high. You are able to connect them. This other high is lower than this other high. You see, we are able to connect them. So we are in a downtrend when we form lower highs and lower lows. You can also connect the lows, okay? It doesn't have to be perfect. You can connect these lows. I hope it is clear. Let us look at channels. When we talk about channels, we mean if we are able to connect higher lows. Let's connect these higher lows, okay? Pay attention to this video, please. Let's connect these higher lows. Now, if we are also able to connect these higher highs, then you are going to form a channel. This is a channel. It doesn't have to be perfect, please. It doesn't have to be perfect. You see, we have successfully formed a channel. Let's say we connect only these ones. These 2. You can connect 2 points, no problem. It's still going to form a channel. Or let's say we connect these 3. And we are able to connect 1, 2, 3. You see, we have formed a channel. This is a channel. I hope you understand. You can also connect these ones. Just don't force it. When you are doing trend lines, don't force it. Don't force it. Don't force anything. Look at something. You are able to connect 1, 2, 3, 4, 5. So this is a channel. When I started trading, this is how I used to trade. I step into the market. I look at channels. I look at an area where price is bouncing off from. And I look at an area where price is bouncing off from also. I'll be buying here and I'll be selling over here. When price comes down here, I am buying. I have my channel. I am trading within this channel. Okay? This could be a trading strategy for you. If you get good at this, you could just look for scenarios like this in the market and you take your trades. You wait for price to come to a support level. You draw your channels. You wait for price to come to that level and you are buying. This is a support. You are buying and you are taking your profits here. Look at this other one. Let's connect this. I'm sorry this video is going to be long, but there is so much here. Just pay attention, please. Let's see if you can connect these points. You are not going to force it, please. You are not forcing anything. Let's look at something. So you could be buying here. When price comes here, you could be buying. And when price comes over here, you could be selling. This could be a trading strategy, okay? Buy at a support and sell at a resistance. And when you get here, you exit your trade. Now, I hope you are able to understand market structure. Please, this is very powerful information. Do not joke with it. Thank you. Look at support and resistances again, how you can use them to take trades. We already said that if price is failing to break above a certain high, it means there is a resistance level here. And this resistance level forms because sellers are here. Sellers are seriously present here. They are pushing price down. Every time buyers are pushing price up, sellers are over here mounting pressure on this currency and pushing it down. And that is why eventually you saw price break below, because the selling pressure became high. The sellers were mounting pressure on price here until they defeated the buyers. When the buyers were down here, they formed what we call a support, meaning that sellers could not break past below here. Buyers were buying here. They were mounting pressure here. At the same time, sellers were mounting pressure over here. So that is why you see the market was in a ranging condition, because there was equal strength in the market. But eventually, someone has to win. Remember, we said the market or currencies are always at war. But if one gains strength, it is going to defeat the other. And a currency can only gain strength because the economy of that country is doing well. So if the Japanese economy did well, that is why it was able to push price down, the New Zealand dollar down. This is another scenario. You see, price is ranging. There's equal strength in the market. And eventually what happens? The buyers push price up and defeat the sellers. The sellers were pushing price down. But when they came here, the buyers stepped in and said, no, you are not going to defeat us. You will not defeat us. So the buyers stepped in and they started mounting pressure here, forming a support and pushing price up. And then eventually the buyers won and they pushed price up. And the sellers were defeated. So you can use this to trade. When you step in the market, look at a support level and buy from a support level. Do not sell at a support level. Don't sell below here. Only look for buy opportunities. When you see a situation where buyers are stepping in, you see this is a support level. It has been retested multiple times. When it is retested multiple times, it means the buyers are mounting pressure here. And eventually you will see them defeat the sellers. Sellers are trying to push price down, but the buyers are stepping in, mounting a lot of pressure here, and eventually price will move up. Remember, in our other video also we say support and resistances tend to reverse their roles. Remember, while the buyers are putting pressure here and forming a support, the sellers are also mounting pressure here, over here, okay? The sellers are mounting pressure over here, and they are pushing price down. That is why the market is ranging. So they are mounting pressure here and are pushing price down. So when they are pushing price down, they are forming a resistance over here, and the buyers are forming a support down here. But we say support and resistances tend to reverse their roles. So this resistance, when this resistance eventually gets broken, what does it become? It becomes a support. Have you seen it? And then price breaks above the resistance, comes back to this resistance, and the resistance becomes a support. And what happens? We see price begins to move up. Look at, as soon as price bounces off this support that was once a resistance, buyers take in. So there are traders out there who only look for patterns like this. They wait for a market to break above a level or below a level. When the market retests that same level, they are buying or they are selling. Okay, in future you may be trading like that. You wait for price to break a certain level, and when price eventually breaks that level and retest that level, you step in and you take your trade. So you could be buying here and you'll be making profit. This is what we had here in our last video. You see, the market is ranging. Above is a resistance, below is a support. But when the market eventually breaks above that resistance, when it comes back to that resistance, it becomes a support, and you will see price move aggressively away. If the market breaks below a support after it is consolidating, when it eventually comes and retests that support is going to act as a resistance, and it will push price down. But remember, these things also fail, okay? These things also fail. They are not always perfect. So you see, a resistance, once broken, can become a support, and it will push price up. Look at something here. While price is moving up in an uptrend, it is also forming a support. Remember, we said this is a support. This is a diagonal support, because it is an uptrend, so it is diagonal. This is horizontal support, horizontal resistance. This is a diagonal support. If you also draw a line here, above here, like that channel, it is going to become a diagonal resistance. So this is a diagonal resistance, because it is where price is failing to, buyers are unable to break past this level. So the sellers are resisting price here. Because it is moving upward, it becomes diagonal resistance. So we have diagonal resistances and we have diagonal supports. We have horizontal supports and we have horizontal resistances. I hope you are understanding. Look at something. When price eventually breaks below this support and then retests that support, what does it become? It becomes a resistance. So you see, this support has reversed its role. This support that was once pushing price up, now price has broken below that support, and when price comes back there, this support becomes a resistance. So it has reversed its role. That is why we say support and resistances tend to reverse their roles. Support can act as resistances once broken, and resistances can act as support once broken. I hope you understand this. So for your assignment, go into the market, just look at resistance, just draw them, okay? Just try to connect points. Use your lines. Try to connect points. When we start teaching you how to use those tools, just try to see, this is a support. You see price bouncing off here. You can just draw these things and wait until they are broken. Look at something here. This was a resistance, right? This was a resistance. You saw price resisting here, resisting there. But look at what happened. Once price broke above that resistance, and came back. That resistance became a support. You see, resistance. Price breaks above that resistance. When it comes back there, it becomes a support. And what will happen? You see price move away from it in an uptrend again. So these things, this is technical analysis, repetition of patterns, technical analysis. So what most traders do is they go into the market and they look at structures like this, structures that repeat themselves. They only wait to see if price breaks above a level and retest that level, they are buying. Okay, and you can see it continues. If you want to draw another line here, look at something. This other one again is an uptrend. Why is it an uptrend? Because price is forming higher lows and higher highs. This low is higher than this low. This low is higher than this low. This high is higher than this high. So these are higher highs. This is another uptrend. But see, when price breaks below that, what happens? It continues downward. See, these things, they are not perfect. Sometimes price will break a support and it will never retest that support. Okay, it will never retest it. It will continue going down. So the market is not perfect. The market is not perfect. Look at something. Look at something. When a support gets broken, see, break and retest. The level is retested. This support becomes a resistance and it pushes price down. We can go on and on and on and on. So you can go into your chart and you start looking at scenarios like this. Look at this. Look at this. A resistance gets broken. This is price retesting as a resistance. It's going to move up eventually. So traders study price action like this and they become good at it. They only look for opportunities like this in the market. They wait for price to react at a certain level, break that level, and when price returns to that level, they are either buying or they are selling. If price breaks above a resistance, comes back to that resistance, it becomes a support. They are buying. Okay, if price breaks below a support, comes back and retests that support, it becomes a resistance. They are selling. So you can master this and you become good at it and you can use it as your trading strategy. We are going to do a lot of this when we start trading in the market. I hope you were able to understand this, and I don't want to take much of your time. The video is already long. I want to explain something to you. When you see scenarios like this, the market is not perfect. When we say the market is in an uptrend, don't think the market is going to form a smooth movement like this. This is a textbook kind of a movement because it makes it look very perfect. This is how the market moves. It moves in a choppy scenario. It moves up, bounces around, moves up, comes down, just like this is how the market moves. But it will continue to form higher highs, higher lows. But it's not going to move straight like what we see here. Look at the market pushes up. Look at how the market moves. It chops around, moves, chops around. So it's not straight. It's not straight. The market is never moving straight. Okay, I hope that you were able to understand something here, and I pray that you go into the market, you practice all of these things, and this could be your strategy. Okay, this could be your strategy. You could wait for a market to consolidate, break, and when the market tests that level, you are selling. You could wait for the market to consolidate. Okay, you could wait for the market to consolidate. I'm sorry. You could wait for the market to consolidate around a resistance. When it breaks that resistance and retests, you are buying and you make your profit. You buy from here and you make profit. Or you wait for the market to break a support. When it retests that support, you are selling. In a downtrend, you are selling. This could be your strategy. You sell. Support turns resistance. Okay, resistance turns support. You are buying, and it goes on and on and on, and it never stops. It goes on, it never stops. We can draw these over and over and over and over again. and it's never going to stop. Okay, so I wish you all the best. I wish you all the best. Go into the market, try to do things like this, but trust me, this is purely technical analysis. For those of us who will be doing smart money concept, you'll be seeing something else completely different from what we are doing here. Completely different. So this is a channel. This is a channel. You see, market moves around inside. Once it breaks, there are names of this. There are people who are good at this. They have their own names. Once it breaks, they are selling. When price retest this support, they are selling. This is another channel. There are names for this. Okay, we'll look at that when we start doing chart patterns. You see, this is a channel. You see, you can buy here, you sell here, but don't buy when the market is moving downward, especially when you are still developing, unless you know what you are doing. If the market is moving downward, only look for sell opportunities. They often say the trend is your friend. Never trade against a trend. Okay, if the market is selling, only look for sell opportunities. If the market is forming lower highs and lower lows, look for sell opportunities only. Don't buy, especially when you are still developing. Make the trend your friend. Okay, don't buy in a sell market and don't sell in a buy market. I hope everything is clear. This is another channel. You can go on and you practice this. Okay, I wish you all the best. My chat is quite messy, but I have to do this so I could explain this to you. I hope that you were able to learn something. I hope that you were able to learn the three types of market movement. Market is either ranging, it is moving upward in an uptrend, forming higher lows and higher highs, or it is moving downward in a downtrend, forming lower highs and lower lows. And we have also talked about support and resistances. A support can reverse its role. It can become a resistance, and a resistance also can become a support once it is broken. I hope that you were able to learn something, and I'll talk to you in our next video. Be safe. Goodbye.